Hey everyone, welcome back to Corporate Decoder, the place where we uncover what companies are really saying behind the fancy words and numbers. Today we've got a filing from Stardust Power Inc. or SDST, as you might see them ticker-wise. Let's dive in and see if this company is shining bright or starting to fade. We'll be looking at a report detailing Stardust Power's potential exit from the Nasdaq. This isn't your typical financial deep dive with profit and loss statements, but it sheds light on a company's struggle to meet stock exchange rules. It is about survival in the public markets. Before we jump into the filings, if you find these insights helpful, please hit that like button and subscribe. Also, we have a great Discord community linked in the description below where you can connect with other like-minded investors. So, Stardust Power Inc. is trading on the Nasdaq global market. We see mentions of their common stock with a par value. A par value is like a very basic price assigned to a stock when it is first issued, often just a tiny fraction of a cent. It has little to do with the actual market price investors trade it at, but it is a legal detail. We also see something about redeemable warrants. Think of warrants as options to buy shares in the future at a set price. In this case, anyone holding these warrants can buy a share of Stardust Power as common stock for $11.5 per S-share. These are often used in funding deals and can sometimes be a sign of a company needing capital. This entire report is a Form 8K, which companies file to announce major events that shareholders should know about. It is like breaking news for a company. The date of this report is the 1st of October 2025. This is the key date for when a significant event we are discussing today actually happened. The company in question is Stardust Power Incorporated. They are incorporated in Delaware and have a Nasdaq file number. This is standard corporate information. The company's principal executive offices were located in Greenwich, Connecticut. This is just an address, nothing too exciting here for our analysis. They have common stock registered with a par value of $0.0001 per S-share. Again, that is a very small, almost meaningless number for the market price. The company's common stock is traded on the Nasdaq global market. This is a major stock exchange. And here again we confirm those redeemable warrants which allow you to buy shares at $11.5. Stardust Power Inc. has checked the box indicating they are an emerging growth company. This means they qualify for some relaxed regulatory and reporting requirements, which is common for newer or smaller public companies. Alright, this is the core of the filing. The company is receiving a notice about delisting, meaning they might be kicked off the Nasdaq stock exchange. This is serious stuff for a public company because it can make it much harder for investors to buy and sell their shares, and it damages the company's reputation. Let's break this down. Way back in April of 2025, Nasdaq had already warned Stardust Power. The main reason was that their total market value for all their publicly traded stock had dropped below $50 million for 30 days straight. To stay on the Nasdaq global market, companies need to keep their market value above this threshold. This is called the minimum market value of listed securities, or MVL's rule. Nasdaq gave them a grace period of about 6 months, until the 30th of September 2025. To fix this, unfortunately, they didn't manage to get their market value back up to that $50 million mark within that time. And that is a big problem. So, because they failed to meet the requirement by the deadline, on the 1st of October 2025, Nasdaq sent them a letter stating they are determined to be delisted. This is the official notification that they are facing removal from the exchange. Now, here is where it gets interesting. Stardust Power isn't just rolling over. They plan to ask for a hearing with a Nasdaq panel. This is like appealing a decision. Requesting this hearing puts a pause or a stay on the delisting process. It means their stock won't actually be removed from Nasdaq while the panel reviews their case. During this hearing, they'll present a plan to get back into compliance. One possibility they're considering is moving to a lower tier of the Nasdaq exchange called the Nasdaq Capital Market. Think of it as moving from a Premier League to a lower division. The rules and requirements are often less strict. Let's rewind a bit. The filing also mentions Stardust received other deficiency letters earlier in 2025. One was about not meeting the minimum market value of publicly held shares, which had to be at least $15 million. That is different from the total market value rule we just talked about. This specifically relates to the shares actually available for trading by the public. Another deficiency was regarding their stock price itself. They needed to maintain a minimum bid price of at least $1 per S-share. The good news here is that they actually did manage to fix these specific issues. They regained compliance with these particular listing requirements by mid-September 2025, just before the deadline for the higher market value rule. This shows they can sometimes meet these stock exchange demands. Now, they include a section on forward-looking statements. This is a standard legal disclaimer. Companies use this to say that anything they say about the future, like potential outcomes of the hearing or their plan to comply, might not actually happen. It is a way to protect themselves from lawsuits if their predictions are wrong. For example, they mention the hearing could happen sooner than expected, which might not be good for them. They're essentially saying, don't bet the farm on what we're saying about the future. This part is the official sign-off. It is basically the company confirming that everything in the report is true to the best of their knowledge. Here we see the signature of Roshan Pujari, the Chief Executive Officer of Stardust Power Inc., dated the 3rd of October 2025. He is officially declaring the accuracy of this filing. This tells us leadership is aware and signing off on this critical notification about their potential delisting. Now, for my take on Stardust Power Inc. or SDST, the core story here is a company struggling with a fundamental requirement of being publicly traded on a major exchange, maintaining a certain level of market value. They've been warned, given time to fix it, and have failed to do so for the $50 million market value rule. This is a significant red flag. While they did manage to fix other listing requirements like the minimum bid price and publicly held shares value earlier, this recent failure to meet the higher market value threshold is a deeper issue. It suggests that investors' confidence in the company as overall valuation is quite low. Remember, the market value isn't just an arbitrary number. It is a reflection of how much people are willing to pay for the company. As stock, a sustained drop below $50 million indicates a broad lack of investor enthusiasm or belief in the company as future prospects. The good news, if you can call it that, is their plan to fight for a hearing and potentially move to the Nasdaq capital market. The capital market has lower thresholds for listing requirements, so it is a more accessible market for companies that might be struggling to meet the global market. S demands it is a step down, but it allows them to remain listed. However, even that isn't guaranteed. Their ability to present a convincing plan to the panel will be crucial. The risk for an investor holding SDST shares right now is substantial. If they are delisted entirely, trading can become much more difficult, and the stock price could plummet further. Furthermore, the fact that they are discussing a potential move to a lower tier exchange suggests they don't have a clear, immediate path to significantly boosting their market cap back above $50 million. For me, Stardust Power Incorporated appears to be in a precarious position. Their current struggles with basic listing requirements are a strong indicator of underlying business challenges or investor skepticism. While they are trying to navigate the system by seeking a hearing and considering a tier transfer, the fundamental issue of low market valuation needs to be addressed. Investors should be very cautious. What is your take on Stardust Power S situation? Do you think they can turn things around, or is this a sign of tougher times ahead? Let me know your thoughts in the comments below. If this breakdown helped you understand the filing, please give it a thumbs up and subscribe for more corporate insights. And don't forget to join our Discord community for more detailed discussions. Thanks for watching, and I'll see you in the next video.